China, extremely negative. What does that mean? They are selling more treasuries than they're buying. Japan, negative. Brazil, negative. Ireland, negative. India, negative. So you guys have to understand, nobody wants to hold these dog shit treasuries. Nobody wants to hold these things, okay? So you're starting to see massive, massive unwind, okay? When you see a market like gold going up and treasuries going down, that's not a coincidence. What is up for grabs is the world reserve asset. That is what's notably up for grabs. You're seeing an unwind from using U.S. debt to store your time, energy, effort, and labor. And there is an up for grabs, open free market competition from where you store your balance, where you store your capital, where you store your assets, where you store your time and energy, okay? So you can see these massive countries on the right unwinding, they're negative.
Mallers starts with a blunt truth. Nobody wants to lend money to the U.S. government anymore. And it's not just about the sheer size of the debt, which has now crossed $36 trillion, but the bleak reality that this debt cannot and will not be paid back in real terms. The only escape hatch left for Washington is to print more money.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Nobody wants to lend any more money to a country that's in $36 trillion of debt and has no way to pay it back. Nobody wants to get paid interest in dollars. Say that again. The problem is nobody wants to lend the US government money and get interest in dollars. You're hearing ideas of Bitcoin-backed bonds. Nobody wants to lend this country money anymore. They're too indebted. They have no way to pay it back. The only way out is to print more money, and you're losing in real terms. Yes, they'll be able to print enough dollars to give you whatever the interest is on your loan to the US government. But those dollars, by the time you get it back, won't get you anything. It won't get you any eggs. It won't get you any gas. It won't get you any housing. In real terms, like what it can purchase you, it will inflate. The dollar will inflate more than they're willing to pay you. Okay? Negative real rates is what we've been talking about on the show. What negative real rates means is if inflation is 5% and US government's paying you 3%, you're actually losing 2% by lending to them. Yes, you're getting 3% interest on your dollars, but your dollars are losing 5% of its value. Does that make sense? And so if you listen to this podcast, you can hear the Treasury Secretary say, listen, it doesn't matter what the Federal Reserve does anymore. We can't get Jerome Powell to move as quick as we want him to move. So I have the tools. As the Secretary of the Treasury, I can support this market. Highly, highly, highly encouraged. But the point is, we heard from the president, we heard from the chairman of the Fed, we heard from the Treasury Secretary. So for those listening, number one is the Cayman Islands at over 100 billion. Number two is France. Number three is Luxembourg. Number four is Belgium. Number five is Singapore. Number six is the UK. And seventh is Tether, notably larger than Canada, Taiwan, Mexico, Norway, Hong Kong, et cetera, India, blah, 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 blah. You can see on the far right, many countries have turned negative. That's the first insight. China, extremely negative. What does that mean? They are selling more treasuries than they're buying. Japan, negative. Brazil, negative. Ireland, negative. India, negative. So you guys have to understand, nobody wants to hold these dog shit treasuries. Nobody wants to hold these things, okay? So you're starting to see massive, massive unwind, okay? When you see a market like gold going up and treasuries going down, that's not a coincidence. What is up for grabs is the world reserve asset. That is what's notably up for grabs. You're seeing an unwind from using U.S. debt to store your time, energy, effort, and labor. And there is an up for grabs, open free market competition from where you store your balance, where you store your capital, where you store your assets, where you store your time and energy. Okay. So you can see these massive countries on the right unwinding. They're negative. Okay. Another very notable thing is on the far left, who's in first? Who's in first is the Cayman Islands. Why is this so notable? The Cayman Islands is so notable because, guys, it's not as if the Cayman Islands as a country is the most powerful financial country in the world. The reason it's the Cayman Islands is because it's a bunch of hedge fund bros that domicile in the Cayman Islands and sling around their hedge funds. So the biggest thing to take away from this is that hedge funds are the biggest buyers of treasuries. Hedge funds and Tether. I'm going to say this again. The biggest purchasers of U.S. debt right now are hedge funds in the Cayman Islands and Tether. That should blow your mind. When we do global trade, we operate in this giant deficit. We export dollars, we import real stuff. In countries like China, countries like Russia are producing. They're producing my iPhone. They're producing this hat. They're producing the energy, the oil that drives my Uber ride from here to the basketball gym. Okay? These countries are not investing in U.S. debt anymore. They're selling it. The only people investing in U.S. debt are stablecoins and hedge funds. Hedge funds are running massive basis trades. Okay, is this all making sense? So when I go and show you guys this, okay, the volatility spiking so high, what's actually happening is all of these hedge funds are puking their treasuries. Okay? What we're seeing is this giant unwind. Where's the volatility come from? Who's selling and dumping all this U.S. debt? Who's selling and dumping all this U.S. debt is all of these hedge funds in the Cayman Islands. I don't think people necessarily appreciate who owns the U.S. debt right now. It is not like China hasn't bought U.S. debt in large quantity since 2014. So the U.S. government has to find buyers of its debt. Who's going to finance the government and allow it to keep, spending ungodly amounts of money in an uneconomical way? That's the main question. And this was fascinating.
Mallers observes how we've pivoted from a stance of aggressive trade dominance, we don't care, we're the biggest economy in the world, to a more conciliatory tone. Why? Because we're running out of options. Foreign buyers are gone. The domestic financial system is saturated. And the only players left willing to absorb U.S. debt are doing so because they're either compelled or financially incentivized to play dangerous games with leverage.
Okay, that's not a new concept. This is a chart from when Janet Yellen was Treasury Secretary. Okay? In the white, what you're looking at is the reverse repo market. Okay? In the gold, in yellow, you're looking at Bitcoin. Okay? What this tells you as the reverse repo market was getting drained. So basically, a long story short, when Janet Yellen was the Treasury Secretary, she had similar. The game is, where are buyers of U.S. debt? Where are buyers of U.S. debt? How can we finance the United States continuing to spend ungodly amounts of money unprofitably? If you're not producing a surplus, if you're not producing a profit, you have to get someone to lend you money. Right? You're running on debt, right? The United States is not running on a profit, right? They're not producing more value for the world than they're consuming. You have to find someone that's willing to borrow or lend you the money. So what Janet Yellen did is use what's called the reverse repo facility to do that. So you can look at this white line as it came down, it's coming down because money is leaving this facility and entering the financial system. And what you can see is a direct inverse correlation is as this thing got drained, Bitcoin went up. Okay? As it got drained, Bitcoin went up. And this now we're looking at historical data. This is not what's happening now. We're looking historically. But what we're looking at is a direct reaction to more fiat liquidity. Okay. Historically, when there's been more fiat liquidity, this specific example was the reverse repo facility tapped by, at the time, Treasury Secretary Janet Yellen. But what we're looking at is when Bitcoin smells and sees fiat liquidity, so a reverse repo being drained and dollars rapidly entering the financial system, it reacts promptly. So when we see interviews like this from Treasury Secretary Scott Bessent, and he sits down, legs crossed, hands crossed, like, look at that guy. And he says, listen, I have what it takes to support this debt market. I got it. I will find the liquidity. I will engineer Treasury buybacks. We will change the rules on U.S. banks so that they can buy unlimited amounts of U.S. debt. Last time something like that happened was with Janet Yellen, and we saw this. Now, we'll have to wait and see what happens. It's very unclear, but that's where we stand today. So from last week to this week, not a ton of movement, not a ton of new, a lot of validating of what we thought and what was existing. We've seen a massive pivot from tariffs. We're the big bad US. We don't care what you say. We have the biggest economy in the world. You're going to sit down and listen, all the way to, this isn't very sustainable. The bond market's falling apart. No one's willing to lend us money and finance this country. No one's willing to buy our debt. We're in trouble. And okay, let's wrap this up with China. Let's make a bunch of compromises. And can someone find the liquidity and buyers of our debt? Because we're in trouble.
Mallers closes with a powerful observation. We are witnessing the slow-motion collapse of the fiat financial system. The U.S. debt machine has run for decades on the assumption of infinite demand for treasuries and unquestioned global trust in the dollar. That assumption is breaking down. Countries are selling. Hedge funds are over-leveraged. The dollar is being debased. And amidst this turmoil, Bitcoin is standing tall, not just as an asset, but as a lifeboat. For Mallers, this isn't just about investing. It's about reclaiming sovereignty over your money, opting out of a broken system, and preparing for a future where the rules of finance are rewritten on open, decentralized rails. Please like and subscribe.